Hey, everybody. SmallCapSteve here. You're watching SmallCapSteve Live. We've got a big show for you guys today. We're going to be joined by Steve White later talking about some U.S. cannabis. Nothing gets me more excited than U.S. cannabis, as you guys probably know. Ianthus is in the news. Lots of bought deals being announced. Also, heck, even Harvest had some news today, so we'll get into that off the gate. This GameStop stuff, got to talk about that a little bit. PowerBand had fireworks over the weekend over a private placement that they announced. We'll comment on that. So buckle up. Let's get going. Joining me today is Mr. Joe J. Lutz. How you doing?
Not bad. It's a slow Monday morning for a lot of things. Not a lot of noteworthy news. If I'm allowed to opine on it, there's a few items, but nothing really of significance. I think the most significant would be that PowerBand news that went out Friday night, caused a bit of fireworks with some shareholders.
Fireworks.
But truth be told, after it did a bit of a dip and rip, and it's holding up well now.
Yeah, and something I don't want to do on this show is just constantly talk about the same names and names that we happen to be long or have been clients in the past or current clients. I want to follow the Canadian small cap markets. But it's interesting to see this company that, stocks had tremendous life. It's doing quite well. They announced this private placement, as I understand it. Let's just talk about PowerBand right off the gate here. I've changed the name of the company from PowerBand Solutions to PowerBand Theatrics. I think that it's quite interesting. The company, as we understand it, they started out doing a private placement like in early January when the stock was 29 cents. Stock did tremendously well. It ran all the way. I think it had a high of like 70 or something like that. Closed on Friday at 65, and then poof, they announced a private placement at like 29 cents with a full warrant. It was like 50 cents or something like that.
49 cents.
So obviously a lot of retail investors are pissed off about it. But it put the company in a weird spot because they were really slow to drop the paperwork, going back and forth with the exchange, making sure that that they had the price protection locked in that they said that they did, all that sort of stuff, little things here and there. And the next thing they know, this private placement is just a terrible look optically. But they also promised a bunch of investors these terms, and it was just basically, they got slowed down and they weren't able to announce it in time. So in hindsight, it looks like it looks messy, but the stock's doing quite well today.
Yeah, absolutely. I mean, optically, like you said, it's a disaster. It's bounced back well, but I mean, I can also understand why people are upset. You bought in at 60 cents last week or whatever, and now there's a raise at half that price with the warrant in the money. It's how it shook out. This thing really started to take off this month, especially earlier this month. So
yeah,
it happens sometimes, but
good problem to have if your stock's doing well. And when they started this private placement, I don't know exactly how the mechanics of it worked, but I'd assume that they were probably showing the deal to a lot of people, and they liked it, and they started buying open market, and suddenly all those people that thought that they were participating in the PP. You're kind of in this tough spot where do you punish them? And they did come in and supported open market, or do you punish the people who were buying at open market 60 to 75? In the end, I don't think it really makes a difference if the stock holds, which it has. So now you've got a tremendous amount of more eyeballs on the story that are like, hey, what is this thing? When you start to actually dig into the comps, as early stage as PowerBand is and ridiculous as it is to mention some of the comps, there just aren't any. And a lot of these private companies that probably are fair comps because they are also early stage often are getting these multi-$100 valuations, if not billion-dollar valuations. So how much further behind is PowerBand than some of these operators? It's a little bit challenging to say, but right now, today in 2021, today's tech investor is after total addressable market. It's a very fragmented business, so auto fintech deals are hot. And this story continues to gain more traction and catch more life, and we'll see where it ends up. A couple months into it after announcing this, but at first it looked like a really bad look, but the stock doesn't really seem to care too much. So yeah, that's pretty much it. Let's move on. GameStop won't stop. This has been a really interesting story over the weekend.
You think you're pretty smart with that title, aren't you?
Yeah. So effectively what's happened here with GameStop is that they're calling this the infinite gamma squeeze. And let me see if I can pull up the chart here. Of course, my internet's slow.
It's trading at $95.31 US right now.
It's trading at $95. And what was it, like a $4 stock earlier in the year?
It hit a high today of 159. So I'm willing to bet a few people got their face absolutely ripped off. Many people know that Andrew left of Citron Research. I think that's what it's called. Mm-hmm. At I think $20, he put out a note. I don't know if it's a full short report. I honestly didn't look into it. I don't pay attention to a lot of the NYSE stuff just because I'm focused on microcaps. But I don't know where he sits right now, but I'm willing to bet he's a bit sore.
Yeah. Well, this is a this is investing in 2021. You got Wall Street Bets, which is this subreddit that's got about 200 million subscribers. And they all kind of realized if we work together by slamming call options, the market maker has to cover on the actual underlying equity. And they're able to just push the stock price higher by buying these like short dated call options at the highest possible price. So they're kind of working, like they're directly trying to manipulate the market, and they're doing it. And unfortunately, that's how these things work. And if you're going to sit down and, you're Andrew left at Citron, I don't know where he sits with the short, if he's out or what happened there. But how do you evaluate that risk?
Well, absolutely. I mean, consider the last 6 months and consider how many short reports we've seen compared to the 6 months before that. Ever since this pandemic, the market's been taken a hold of by the retail traders on Robinhood, which is largely, I imagine, pushed by Wall Street Bets. Wall Street Bets, the subreddit, has seen the hockey stick grow. So, I mean, that tells you the influence it's had on the market. And, I mean, GameStop isn't the only one. There's a number of names out there today that they ripped. BlackBerry, Fizz, RKT, Palantir. Palantir has since fallen off, but there's a lot of these being just ripped. And I mean, whoever was ballsy enough to short these after that rip happened, they're probably sitting pretty well. I mean, look at GameStop there. Whoever shorted at 140, if they took that risk, is probably doing pretty good right now.
Yeah, let's pull up the 1 year here. And I believe that one of the guys from The Big Short, it was either Michael Berry or Steve
Berry, I believe, bought it $4 or something.
Of course he did. Of course that fucking guy bought it $4, and now he's got
the poor broke man.
Yeah. So I don't know. I think it's fascinating. I saw a lot of different hot takes on Twitter. Some people saying that this is totally unfair. This is market manipulation. But you know what? Retail investors get it from institutions and from these larger funds all the time. So if you're a short seller and you're going to try to manipulate the market and scare out retail, well, guess what? You got something coming. And that's called Wall Street Bets. And now you're going to know what that feels like.
I'll also do a shameless plug here and say that the founder of Wall Street Bets was on the Daily Dive on Friday, if you want to check that out.
Yeah, I think it's fascinating. And I'm sure that we're going to see some sort of regulatory reform out of it with the impact of Robinhood. And this is into a whole discussion too about, and it's something that I think I certainly forget. When sometimes people call me a guru on Twitter, and I just that's stupid. Who would listen to what somebody says on Twitter and buy stock because they did? But there's this whole subset of people who don't actually understand this stuff, but they'll go on Reddit, and like my buddy Kyle, who's a plumber who's never invested in his life, is asking me about the GameStop move. He's on Reddit all the time reading about interesting stuff, and like he thinks that this is fascinating.
I will say I'm not sure I agree with the access to option trading that a lot of these people have. Like they open their first account and the first thing they do is buy options, and I'm like, it took me a year to fully understand the proper implications of options trading, and I still avoid it for the most part.
My heart skips a beat every time I make an options trade because I don't fully understand what I'm doing. I get it, I can explain it to people, but when I click am I like accidentally gonna end up going short because I like there's a lot of different options when like on my I generally trade through TD. When I open it up and like buy to cover or buy to open, and like there's all these different options, and it's like I mostly understand it, but what if I accidentally put something wrong? And like I remember I was short one stock and I thought that it expired, and then the next the following Monday, I just have this huge short position because I thought it expired worthless, and I guess the stock dropped and fell in the money, and then TD just gave me this huge short position. I generally don't short stocks. I think that was the first time I was ever short anything, other than like buying puts occasionally. So it's a great point. We've got all these young people that suddenly have access to these sophisticated instruments that guys like us who sit around and we're kind of nerds, reading balance sheets and income statements and, trying to understand exactly the mechanics of how these things work. We're like nervous to touch these things. And
then consider the big story last March or April, whatever it was, with all those brand new traders who had never traded a thing in their life, trading futures contracts, and oil goes negative. Some of them were only saved by the fact that their brokerage was so crappy that it didn't actually show the negative, so the brokerage had to cover the loss effectively.
Yeah,
like it's ridiculous what people have access to so easily, and I know that I'll probably get pushback from people saying, "Oh, free markets, yada yada." But at the end of the day, when you don't understand the implications of some of this stuff, it can be life-changing and not in a positive way.
Look, I think that it's fine as long as like Robinhood has structures in place that prevent people from losing more than what their account's worth. But like, from when I
think Robinhood does, look at GameStop, look at Fizz, look at BlackBerry today.
What would happen if you wrote a bunch of puts on GameStop and you've got the short squeeze or this infinite gamma squeeze, as people on Reddit are calling it, and then suddenly like you're now negative like $100,000, and you're just some 22-year-old kid who bought an app that was like playing around thinking he's playing a fucking video game, and it's like, oh yeah, by the way, you're starting your life with this gigantic hole that you may never get yourself out of because you didn't know what you were doing. Is that possible?
Absolutely, there is. Robinhood's actually been, I don't know if they were directly responsible, but there have been suicides that have been connected to Robinhood and the platform from people doing effectively that.
Yeah, it's the funny thing is I always see people on Twitter, Twitter type personalities that are like, they like to pretend that they are options traders and they get the options game. Oh, I get the options game. I make a lot of money trading options. And it's just, I don't know if you've ever talked to somebody who's like legitimately good at trading options, but they're really smart and their understanding of how to structure things in volatile markets and is just, whew.
I guarantee you, if you went on Reddit and asked half of Wall Street Bets what the Greeks are in relation to options, they wouldn't even know what the hell you're talking about.
Mm-hmm. Yeah. I don't like the whole, pretending that anybody's more highbrow than anyone else. But it is certainly, these are exotic instruments that are, should take somebody years to really understand before they touch them. And and I'm the same guy who thinks that retail investors should have easy access to private placements. Like I think that I suppose the thing that makes me nervous about all this is if you are structuring yourself in a position where you can lose more than your original investment, that's too exotic for retail, right? Like,
yeah, well, and that's what I mean. Like, I can go and rate options on GameStop, but couldn't go in and invest in GameStop's private placement? What could I lose more on? You know, like,
Yeah,
it's ridiculous.
And in Canada, and you know, people are finally getting sick of it with a lot of the short and cover funds. But and this is, I've talked to securities lawyers who tell me that everything that was going on in Canada these last couple of years with, you know, share loan agreements, and this is a whole like much bigger conversation. But you know, these short and cover funds that are doing private placements, and they're just shorting the stock before they even get in. It's like you're filing, or you're creating free trading shares without filing a prospectus is what you're doing. In high level, that should be not allowed. That should be illegal. But you know, the regulators, they turn an eye to it because it's funding these companies, and they don't, for some reason, they don't want to create a mechanism that allows for retail investors to invest in private placements, which would make so these short and cover funds don't need to exist. But nobody wants to put cash on their balance sheets. So instead, they got to turn to, like, I'm not going to name the names because I don't know. I suppose I could get in crap for it, even though everybody knows who they are. And they legitimately serve a purpose, a function in this market where they are putting cash on companies' balance sheets at the expense of retail investors. So if a retail investor buys open market, they're actually creating, you know, this financial product structure that somehow puts cash on the company's balance sheet, where this giant spread is taken by these sophisticated fund managers, of which there's a select few in Canada. I don't know. I know that's more of an infrastructure thing and a regulatory thing. But like it's kind of fucked up that like you're investing in these things where this huge spread's being taken off you. You don't understand that, and the regulator doesn't give a shit. So like there's an argument to me that says that private placements are actually a lot safer than buying open market. Is really what I'm getting at.
In some instances, absolutely.
In a system that's stacked against the retail investor, and that's like, I'm told, I don't know, but I'm told in Australia it's much easier to invest in a private placement. And you know, hopefully, like, we're seeing some of these platforms pop up, like Dealmaker, Invested.ca, and I know there's a handful of other ones. But hopefully, that gives more retail investors access to invest in these. Like, why don't they get the warrant? You're going to give it to a fund who does a share loan agreement with some random, not random, but management. It's, I don't know. Let's move on.
Absolutely.
It gets nauseating. Okay, so Ianthus, what happened here? Talk to me about it.
Ianthus. So, I mean, I almost avoided covering this one solely for the purpose of I'm tired of writing and hearing about Ianthus at this point in time. My inbox has been bombarded the last while. Apparently, there's a bunch of allegations going on Stockhouse. I haven't had the time to look into it. I've simply been too busy. And I don't know how many people actually care about Ianthus anymore, given the whole the events that have gone down. But yeah, so former Chief Strategy Officer Elizabeth Stavola is actually going head-to-head with the company now. So it appears that she still owns the majority share of MPX New Jersey. And effectively what she's saying is piss off to Ianthus, who is trying to effectively run the operation without having proper majority control on it. And she's filed a complaint on that. On top of that, temporary restraints have been put in place so Ianthus can't claim actual ownership of the asset. And they've also had a class action lawsuit filed against them for text message marketing that they've done through a holding company in New York.
Ianthus did?
Ianthus did.
So
yeah.
They were sending out text messages to retail investors in the state of New York? Did you understand it?
I don't know what it was. I don't know if it's related to that or to purchasing product or what. I don't know if these phone numbers were provided by customers and then they were just bombarded with no way to exit or anything. Ianthus naturally was very, very slim on details, just saying that there was a class action lawsuit related to text messages, and that was that. Lastly, the company also confirmed this morning that there's an appeal in connection with the recapitalization transaction. I believe, it's supposed to occur tomorrow over Zoom conference call. It's just something that's gone on endlessly over the last week. Again, I've received so many emails from different investors just pointing to the stuff that was allegedly posted on Stockhouse about potential larger offers that weren't taken or explored. And I mean, the trouble with Stockhouse is, I'll be honest, it's not that hard to make something look like it has official company letterhead and post a picture. Is that what happened, or is it legitimate? I don't know, and I can't tell you the answer for that. But that's why I have not wrote on it. In a similar breath, when the recap stuff first went down and the allegations of against Hadley Ford first came out, we didn't cover it for the same reason. You just don't know how legitimate anything is on a message board, right? So,
no, that's fair. I feel very conflicted with Hadley. I've always liked him. I thought that, he served his shareholders well, going to every conference, speaking at every opportunity he had. But then, like, that stuff happened with Gotham, and it's like, are you working for Gotham or are you working for Ianta's shareholders? A lot of stuff happens with Gotham that, quite frankly, I don't like. And I can get into all that another day. I'm not going to get into that now. And they're generally known to be, bad for the space, to put it to, delicately. But I'm interested to see what sort of happens with Hadley, because I assumed Hadley would just go and work in the background for Gotham. But hearing rumblings that that's not happening, that he's still actually kind of fighting for shareholders today. Who knows how real any of that is? But man, Hadley would be fun to have on here.
We'd have a lot of views and a lot of hate mail.
Yeah. There's so much stuff and that's the tough thing about doing a live show like this, is I don't know what I can and can't say, because I get sent a lot of stuff too, just like you do. And like, I don't know what's real. I don't know what isn't. I don't know what's happening. I know this, retail investors, they have a right to be pissed off when things don't turn their way, because they're only given the facts that they're given, and they have to draw their own conclusions based on those facts. And they usually don't have the full picture. So like, if I were a retail investor, I would be livid with Hadley Ford, but we don't know exactly what went on and what happened, and everything that's going on there. So it's like, it's easy to have a hot take and like be all pissed off, which a lot of people are. But I just like,
it's so murky. Yeah, it's so hard to.
Let's move on to the next one, because like, I feel like I'm just kind of doing that political thing where I'm talking and not saying anything, and I hate when people do that. Canada Nickel reports 52% nickel recovery and testing at the Crawford project. What can you tell me here, Jason?
So yeah, a quick little hit here. Canada Nickel, as you said, they've revealed 52% nickel recovery in metallurgical testing for their Crawford project. It's great grades. If they're able to do this in a actual production environment, it'll be the highest concentrate produced by any miner globally. So concentrate grades of 37% for high grade and 13% for standard grade, giving them a total nickel recovery percentage of 52%. And that's split effectively 50-50 between the high and standard grade. So, I mean, quick little hit this morning, but great results. They're continuing to refine their testing and flow sheet methods. And even if it doesn't get any better, these are great numbers, and hopefully they can hit it in a production environment if they get to production.
Is there like a standard price for nickel as a commodity, or is this like one of those things that there's not really a spot market?
I think it's a spot market, but it's not nearly as frequently traded as other spot markets.
Okay.
I mean, most metals have a spot market, but the question is how frequently they're traded and how often the price actually changes.
I'm seeing lots of marketing materials for different nickel companies come across my desk. Companies raising money we got this nickel project. So Canada Nickel, they have a bunch of success, and now everybody else who in Canada who's a deal maker type. They're looking at going, okay, well, let's go grab a nickel project, throw it in a shell, and see what we can do. We'll see. I mean, this could be the early stages of a nickel run, or there could just be a whole bunch of
follow-on plays.
Yeah, follow-on plays that end
Yeah,
bad.
I mean, stock is performing well this morning, up 4% to 260. So, I mean, investors clearly like it.
Mm-hmm. Let's move on to the next story here. Amex Exploration hits 31.87 grams per ton gold over 5.1 meters at a new discovery. Is it called New Discovery, the project, or is this a new discovery?
It's a new discovery at the Perron project. Sorry, that's a terrible headline now that I look at. Sometimes I get so in the weeds in the morning when I'm writing these that I don't come up with the best headlines. But yeah, 31.87 grams per ton gold over 5.1 meters. If you scroll down, the full numbers are there. Over a total length of 7.3 meters, they averaged 22.44 grams per ton gold. This was the only drill hole conducted at this new location. However, my understanding is that it bodes well for the rest of the property because this was just a there's several spots thought to be similar to this spot on the property. Again, it's contiguous to Star Peak, who's a client, but that's where the historic Normetal mine is, and that's why Amex originally started drilling here. Results. It's a 300,000 meter program, so this company's serious about developing the project.
Mm-hmm.
But yeah, so they've now moved 2 drills to this target, so they're clearly looking to define it after these early initial results.
Star Peak's going to be on the show tomorrow too, by the way. If not sure, I'm sure we'll be talking about this. A name that let me pull up the chart here. Star Peak is a name that's actually started running last week. I don't know what's the story there, but it's done well. Any other symbols here that you want to talk about here? Well, we got a few minutes.
It's whichever. I mean, like I said, this morning was pretty slow. There's a ton of bought deals going on right now. And initially, it was largely cannabis. Then it led to psychedelics. Now gold's getting in. We saw that last week with Great Bear Resources doubling their financing to just under $70 million. I think it was $69.9 million this morning. Or Argonaut Gold announced $20 million. I didn't look at the terms of that one, but it was sizable. Alpha Lithium this morning with a $10 million bought deal. Psyched Wellness, who is obviously in the psychedelic space and a client, they nearly doubled their financing, which was announced Friday. Tons of money flowing into small caps in general. Truth be told, I'm getting tired of writing these stories on bought deals, but the amount of money flowing, it's just wild.
Yeah, you're saying that to me is that all you're writing about is bought deals, and like it's too much on the website. But I think that these are great things to follow because the more bought deals we see, the more money that's flowing into the small cap and junior markets, and that's a good sign. The question is how much of those that PP money and bought deal money is actually just taking away from what could be open market purchases.
Yeah, and that's exactly.
Yeah,
like consider all this money and then consider it's been taken effectively from the public markets. Is it still public market? Absolutely, but instead of open market, it's in the placement. It causes a bit of dilution. I mean, these companies need funding to go forward with their projects, operations, everything. I absolutely get that, but at the end of the day, I'd much rather see that all be open market buying, right? But
well, we got a few minutes. Q Media. I want to make a mention of them. This is a name we've been on for a while. They've been a client. We're long the stock currently. They had some pretty good news last week, and I just kind of wanted to talk about it briefly because I think that it's they might be turning the corner here. What can you tell me about the news that you were reading or that you wrote up last week? Let me pull up as well.
QU was a market mover. Was it Friday or Thursday? I can't remember offhand.
They put it on Thursday, and then you did a market mover on Friday. Yeah.
Apologies because the days blend together so bad. So they've announced monetization of their Q India, which is a flagship asset. And initial orders within the first 2 weeks of January were $200,000. Why is this significant? The previous quarter, they reported, I think, $369,000 in revenues. So to get revenues like that in the first 2 weeks, it tells me that the monetization could be quite significant. Again, I'm not an expert on Indian media, but when I see $200,000 come in the first 2 weeks in ad sales and there's more coming, it looks like things are finally starting to go. Full credit to Chairman Scott Patterson and CEO Kurt Marvis. They have been working on this for years. And I mean,
they've taken their licks too in this.
Oh, absolutely. But I mean, my understanding is, I mean, we've talked extensively with both of them, as you well know there, Steve. And it seems it always takes a couple of years for these companies to pan out. Look at Lionsgate, look at Cinema Now, both of which they were behind. And Lionsgate is a household name, right? So they seem to know what they're doing. Kurt was also behind MTV, which is MTV, right? So very well experienced, and now that monetization has actually happened, the ratings are great, and those ratings alone are just cable and satellite, whereas they're also on the India version of TikTok, which has insane viewership numbers. I think the average viewer the average active user on there spends 53 minutes a day watching these videos. Not necessarily QUs, but it tells you the engagement that this app has, and QU is just announced monetization on there as well. So they may have reached a turning point.
I'm going to pull up the data here. I'm not sure if Steve White hasn't logged in yet. Let's give him a little bit more time. But let's pull up the data here on. Let me try to see if I can grab it on. Oh, there he is. Okay, perfect. Steve, can you hear us? See if we get the audio going. Hello, Steve.
Technical difficulties.
Yeah, this isn't the first time we've had this issue. Hey, Steve, can you hear us?
I can now. Yeah, I had my volume off.
Oh. Perfect. Well, thanks so much for joining us. I'm really excited to have you here. We are huge nerds, fanboys of U.S. cannabis stocks. So anytime we get to have somebody like you on the show, who I'm sure you've been involved in U.S. cannabis since what, 2013 was I reading?
Earlier, actually, we were one of the original licenses awarded in the state of Arizona in 2012, with an initiative that passed in 2010. So I'm old.
What was your background before you got into cannabis?
I was a lawyer, and I was a disgruntled lawyer. And then the cannabis opportunity came along, and so it was quite easy to say yes to it.
So what was everybody in your world? I'm sure your parents were super proud. You go to law school, then you announce to them, "I'm going to get involved with a Schedule I drug." What was the reactions from everyone around you at that time?
It was most of it was, yeah, that good luck with that. You got no shot. The industry is never going to get off the ground. You're never getting anything open in the state of Arizona. It was a lot of that. My parents were shockingly not upset, despite the fact that I followed exactly the career path that I think they would have mapped out for me, and probably did map out for me without my full understanding or knowledge. But they were supportive. But generally, people just didn't believe. I mean, this was early. People didn't believe that this was going to be a legitimate or a real business.
Mm-hmm. And so you started out. Did you end up like having to raise money to open up your first store? What was that like early on to try to get the capital just to sort of open up your first shop?
So we did it differently at Harvest, and this is one of the things that makes our company unique. We had we started talking to friends, and we're not a wealthy group of people, and so it was asking somebody for $20,000 was a big ask. I don't come from a big capital markets background with access to private equity money or anything like. I've never asked anyone for money in my life, and so there was a really uncomfortable situation, except for the fact that there were a number of people who just started kind of crawling out of the woodwork and saying, "Hey, can I get in on this?" And so what we did was we raised a little bit of money, enough to get a store open in Arizona, and we were in it for less than $1 million when we got the first store open. And then it became important that we get profitable real fast because we needed to reinvest that money to start building out cultivation. And so we learned by necessity, because we didn't have deep pockets. We learned by necessity we needed to run profitable businesses, and we needed to figure out how to do that in a hurry.
Okay. So at what point did you guys decide, okay, you're running, a couple of profitable dispensaries. Now's the time to go out and start talking to institutions and fund managers to try to go get more capital to expand. Was that sort of when cannabis stocks in Canada first started going crazy, or were you having those conversations like back in like 13, 14?
So I was not having those conversations. We were head down. And what we were doing is we figured out that we could win applications from states as they were allocating them. And then we were investing proceeds from previous states into new states to get those facilities open. I wasn't thinking at all about Canadian stocks. In fact, I was going to say I still don't, but it wasn't until much later that I studied what had happened in Canada, and realized that there's an easier way to do this, or a less painful way, that didn't involve my credit cards being maxed out. And so we didn't meaningfully raise money until 2018. And so we had one of the largest footprints in the country without any outside capital at all. We just ran good businesses, and we got market access cheaper than other people. We couldn't buy businesses, of course, but so we got really good at license applications.
Okay, so somebody approaches you, they say, okay, these, I don't know if you've seen these Canadian cannabis stocks, they're going crazy. We've got a few US operators, they've gone public in Canada. Some are doing tremendously well, like Ianthus, MPX. This is a great option. You go, you head north and go public on this thing called the Canadian Securities Exchange. Why did you choose to go down that route as opposed to just continuing on the path that you were on?
So sometimes I wonder that myself. But the answer is, we found ourselves in a position where we got so large that our only option was to continue to grow. And we realized that we were at a disadvantage because we'd been growing only organically. Other people were acquiring businesses, and we didn't have a currency to do it. So we couldn't join that party. And so for us, if we wanted to get larger, if we wanted to kind of step into the M&A world, we needed to have a currency to do it. And so that was the choice. The CSE is really, for US operators, the only option. They happen to run a really solid exchange, but it is the CSE. And so for us, it became, I don't know if I'd call it a necessity, but it is interesting. I'd never heard of Ianthus. MPX I knew because they had a presence in Arizona, and I knew their principals and had conversations with them, and they were saying, you need to think long and hard before you jump into the public world, because there's a lot associated with that you're not thinking about yet, that makes it different than just operating a good business.
Yeah. It's funny. We were talking about Ianthus and Hadley Ford earlier, and just all the drama that happened there, over 60,000 shareholders. And I'm sure that for Hadley, he's kind of got his head down and afraid to go on social media. Do you, is that a challenge for you with, being listed? Do you try to sort of, because I don't see you doing a whole lot of media appearances. I hardly ever see anybody on social media mentioning Steve White? Is that by design, or is there going to come a point where you're going to start to, really get in front of the crowds and sort of put your name out there?
It's partially by design. I mean, we know at Harvest what we need to do, and it's about executing the business fundamentals the very best that we can. And so that's what we do. And it doesn't involve me having social media accounts. I don't have any, and I don't anticipate that I ever will have any, because that doesn't change the ultimate outcome of this business. If we run a business where we drive the top line and we control costs and we make intelligent capital allocation decisions, that's what's ultimately going to make Harvest and its shareholders prosper. The other stuff I leave to other people who maybe are younger than me and understand it better. But I find a lot of it is a distraction.
Yeah, that's a pretty good answer for shareholders to hear. Okay, so you guys are 4 main states. It's what, Arizona, Florida, Maryland, and Pennsylvania, right?
Yes, sir. That's yeah.
And what other states have you successfully applied for licenses and flipped? Is it just Arkansas, or are there a couple more?
We have sold some assets in the state of California. We've sold some assets in the state of Arkansas. But to me, when we list out our 4 core markets, what we're trying to signal to people is this is where Harvest is going to have the greatest impact. We talk internally a lot about, we allocate capital based on fast and favorable returns. Those are the 4 states where we're going to get the fastest and most favorable returns. And so if we have assets in other states, it's really the fundamental question of, those are the 4 states where if you ask me the question, do I want more in those states? The answer is yes. In some of the other states, if I feel good about our footprint, then I'm clearly not as excited as I am about those 4 core states. Those 4 core states have really bright futures in front of them.
Okay, so Arizona just went rec. Was it on Friday?
Yeah, we got the first approval on Friday, and at Harvest of Scottsdale, we recorded the first sale in the state of Arizona 17 seconds after approval.
Okay. So what can you tell us about Arizona? Like, it's in terms of just high level regulatory, like we know Florida, there's like 20 or so licenses, you get the full vertical. What's the dynamic like in Arizona right now?
So the way the license structure works is unique. Every license is a fully vertically integrated license. There are about 130 of them that have been allocated and under the medical program. If you have a medical license, you're able to add recreational sales to what you do. But it's a unique license set because you look at some of the other markets and you see a limited number of cultivators, for example. And then that becomes the place where you can really drive shareholder value. In Arizona, because you have equal number of cultivation, processing, and retail opportunities, the real value lies in retail.
Okay. So Florida, it's obviously a really challenging state to compete in. TrueLeaf kind of dominates. How have you guys been able to find your sort of footing there, and what's the strategy to grow within that state?
Well, candidly, we haven't found our footing there yet. And so we announced this morning a financing arrangement whereby we were going to continue to invest in Florida. To be honest, the issue that we have 6 open stores, and those stores sometimes run out of product. And so we don't have, because there is no wholesale market in the state of Florida, you really have to have deep cultivation and manufacturing capacity in order to really take advantage of the opportunity there. We have been in construction on expanding our capacity. Like I said this morning, we announced some financing to cover some of what we've already done there and continue that process. But in Florida, we really haven't hit our stride yet. And so for us, Florida is really going to be a 2021 conversation.
Okay, so Pennsylvania, my understanding is that you guys did a great job just winning licenses the old-fashioned way, applying, being competent individuals as opposed to just, blowing out your cap structure to go get them off somebody who was competent. So what can you tell us about what you guys are doing in the state of Pennsylvania and sort of where you kind of see or what the strategy looks like in the state?
Yeah, so Pennsylvania is a great market, and we've got a full set of licenses. And in other words, we can't get any more. So we have the ability to cultivate, we have the ability to process, and open up to 15 stores. We have 8 open today, so we're going to see 7 more open as quickly as we possibly can because that market is really hot. We're also simultaneously investing in our cultivation and manufacturing facilities so that we can increase our capacity there. But what you've heard over and over, and the reason why you've seen M&A activity increase there and people pay big sums of money to access that market is because it is a really good one. It's a really well-regulated, very good medical market that's growing at a rate that is similar to a Florida, which is very, very fast.
Okay. Let's talk. Let's just go through all the states. Maryland. What's the strategy there? What can you tell us about it?
Yeah, so Maryland's a little bit different for us because in Maryland you have a cap of only 4 retail facilities, but there are a limited number of cultivation and processing facilities, and so we have cultivation, we have processing, and we have only 3 stores, so we can add 1 more eventually. There we are a net wholesaler, which is unique for us. And so we are continuing to invest in our cultivation and our processing capacities there, and we'll continue to lean into that wholesale market because we can obviously produce more in our cultivation facilities than we can sell through our retail. The thing about Maryland that's exciting to me is that there has been and continues to be conversations about adding recreational sales. And that is, Maryland is like Arizona in that nobody's going to talk about it until they start talking about it, and that means it's way too late. And so Maryland's a place that we value as part of our portfolio. We love that marketplace. We'll continue to invest there, and we'll be ready when the transition does occur in that state.
On the topic of transitioning from medical to recreational states, what do you expect in terms of an increase in overall sales within the state? Arizona is probably the best example. Where do you see the market heading now that recreational has come in?
Yeah, it's a great question. And the delta or the multiplier that people talk about, historically, folks have always talked about somewhere between maybe 3 and 6 times revenue when you add recreational sales. And the difference depends on how mature the medical market is. Arizona is on the closer end to the 3 times. It's about an $800 million medical market. And we anticipate that at maturity, it's going to be a $2.5 billion recreational market, which is really funny that people say, well, that's not as big as some other place, to which we just smile and say, okay. If you're concerned that a 3 times multiple isn't good enough, I don't know what to tell you. But with more mature medical markets, the delta is going to, or that multiplier is going to trend towards the lower end of that range.
How big are you guys in terms of Arizona? Like, where would you guys rank yourselves in the competitive landscape in terms of market share?
You should know the answer to that question without asking. Let me give you I'll just give you the numbers, not the sales numbers, but the numbers. We have 15 open stores. The next largest company has 8. We have 18 licenses, so we'll be adding 3 more. The next largest company has 9. Below the one with 8 and 9, there's a big gap between the rest as well. And so there are 2 of us that are big, and we are the largest in the state of Arizona, and we don't anticipate that that's going to change. If anything, my preference would be to add to what we have in the state of Arizona. We're big believers in that state.
So you are able to add then just by acquiring additional retail locations or whatever? There's not a capacity limit in terms of market share?
There's no limit on the number of they're under the medical program. There was a limit on how many each license holding entity could hold, but an umbrella company could hold multiple license holding entities. So there, in essence, there really is no cap in the state of Arizona. So we could theoretically own the entire market. That's never going to happen, but that is something that is conceivable.
So not sure if you want to answer this, because I don't know if this is kind of getting into your internal strategy, but are there other states you're not in right now that you're closely eyeing?
Yeah, there always are. And there's an analyst who asked me this very question with nobody had ever asked it again. If you could snap your fingers and be in a state that you're not currently in, what is it? My answer to that question today, well, there's two. I would love to be in the state of Illinois. We had a strategy to be in Illinois. We started investing in the state of Illinois. That didn't work out. It's still a really great marketplace. And so that's a place that I've always had my eye on. The other one that a lot of people are talking about is the state of New Jersey. State of New Jersey has a really strong regulator, has a undervalued medical market, and at some point when the legislature can figure it out, they're going to transition to recreational sales. So there's a big catalyst that people are going to get to enjoy. Those two states today are probably the two that I would identify as ones that we currently don't have a presence in, but would be places that we would, if the right opportunity presented itself, we would like to enter those marketplaces.
That's an interesting sort of thing. So the right opportunity. I understand if you're looking at M&A, diligencing a lot of these operators must be a massive headache to figure out, who's worth, the investing the time in, and how do you go about diligencing an operator?
It's hard, but you've got to spend a lot of time, and you've got to just be very thorough, and you've got to look at things that you wouldn't look at in some other industries because it's cannabis and it's federally illegal. And then what you do is you realize that you're in the due diligence process, you're never going to pick everything up. So then you have to be intelligent about how you craft your agreements, so that if you did miss things, that there are ways that you can account for that, particularly if it's not your fault. So it is hard to do. You have to have a team dedicated to doing it. We have said repeatedly that our focus now and going forward is not on large transformational M&A, but rather on continuing to build out organically. But you asked the question about which markets I would love to be in, and so I answered it.
Okay. I got one last question for you here. Verano Holdings, obviously one of the hot companies that I think they're looking to go public this year. I might be wrong about that. But they're known as one of the top private operators that currently isn't public. You guys almost did a merger with them. Can you give us any sort of color on what happened there?
Yeah, it was so they're a great company, run by great individuals, and that was our plan on Illinois. So that was our entree, and it didn't work out for a variety of reasons. It started with the fact that we had some federal government interference from the Department of Justice, and then because it took so long to actually be able to close that transaction, both companies had to continue to grow. And so then we had an issue of being over the limit as far as assets in a number of states. And we realized at some point that some of those states were going to be real problems for us to actually close the transaction. And so we weren't ultimately, we were disappointed, but we weren't ultimately able to consummate that transaction. But Verano has a bright future. And, we'll continue to work with them in the markets where we share presence, and we'll continue to be friends with those people going forward.
What's the investment climate? You're having these conversations regularly with investors in the U.S. I'm sure that 4 years ago, if you were talking to them, like I was talking about earlier, it's a Schedule I drug. Why would I want to invest in that? How is that investment climate changing, especially with Biden now under leadership?
Yeah, so it because of that federal illegality. I mean, it's not 4 years versus today. It's this week versus last week. It literally changes that quickly. Right now, people realize that U.S. cannabis is an incredible investment opportunity. And so people are banks, institutional investors are trying to figure out how they could take advantage of it. And they have internal fights with their compliance departments and with their lawyers about how to do it. The great thing about the election, and it's frankly less about the Biden administration and more about what happened in Georgia, is we actually have a path now that we never saw before, a path to see a vote in the Senate, to see some real reform on the federal level. I'm not saying it's going to happen. I've given up on trying to predict when things are going to happen on the federal level, although I'm quite confident they will happen. It's a question of timing, but the path is now there for us.
Okay, this is my last question. Let's say that at the end of December, you and I, we sit down, we chat again. How would you want investors to judge your performance on December 31st, 2021?
Well,
by what metrics? Like what would you consider to be a successful outcome for the year of 2021 for Harvest? Like what are those? If I'm a teacher and I'm doing that sort of self-evaluation guide with you, what do you think are the goals that you're trying to accomplish this year that, regardless of share price, EBITDA, revenue, let's put all that aside, what are the catalysts or those milestones that you're trying to achieve this year that you think you'd be able to look yourself in the mirror and say, I did a great job as the CEO of Harvest?
Yeah. So when we talk to investors, the answer is going to be that no matter what we tell them to grade us on, they're going to grade us on share price. We understand that. But we have to do a good job of determining what things are going to be the biggest drivers for our organization, which will ultimately drive share price. In my mind, there are really three things that you want to grade us on over the course of 2021. Maybe four. Let me make it four. First, how do we do on the transition to recreational sales in the state of Arizona? That is going to be a big driver for Harvest. It's going to be a big driver for Harvest going forward because it's such a significant part of our footprint. Secondly, how do we do on building out timely our cultivation facilities and hitting our production metrics there? How far did we get in our build out in Pennsylvania? We start the year with 8 stores. Did we add to that? Did we add meaningful cultivation capacity? And then fourthly, did we do anything to clean up our balance sheet? If at the end of 2021, and we should have this conversation, you should come and ask me about those 4 things. How did we do? Those are the things that I think are going to drive shareholder value. They're going to drive the company and ultimately drive shareholder value. So those are the things that we're spending a lot of time.
Obviously you can only control what you can control. I think that what the cannabis stock market does over the next year is going to play a big role in that balance sheet, obviously, because if there's money flowing in, it's much easier to clean up that balance sheet and get away from any of the terms you don't really like. But Steve, thank you so much for taking the time to join us. We really appreciate you willing to hop on here and chat. I actually didn't know that much about Harvest, quite frankly, before hopping on, other than what I see on an investor deck. So it's always nice to get to sort of hear more and have more color on the company.
Very good. Thank you for the opportunity. I appreciate it.
Awesome. Okay, so Jay, what else do we have going on at the Dive today?
Going on at the Dive. Apologies, I just got some urgent emails I had to address there. This afternoon, we've got Brian, I'm going to say this wrong, Belsky. Is that correct?
Right. Yeah, Brian Belsky is Chief Investment Officer of BMO. Total rock star, came on talking. I got to sit in on that interview, and it was it's a lot of fun. He's 2008, 2009, he called a 10-year bull market, says we got another 10 years to go. He's also telling us, look, all those guys you see that are popular, bears on social media, ignore them. It's this equity bull market is going to keep running. It's going to keep being hot. Great interview. That's one that I don't always encourage people to hop on and watch those video interviews, but this is one that I really think you should check out.
Yeah. So for the record, for our viewers that are left after the interview with Steve White there, Steve has been talking about this interview for weeks. The moment that he found out Brian was going to come on, he was all jacked up. He watched endless hours of video of him so he could ask great questions.
NBC all the time. He thinks, a lot of the people that we talk to in our world are micro cap, small cap guys. So they think like us, bottom up. Let's look at balance sheet, cash flow statements, accounting notes, all that kind of boring stuff. And then, the people who tend to get a lot of trend and action on the macro side are usually your bears. The world's coming to an end. The US dollar is going to lose its reserve status, all those kind of people. Brian's like a legitimate chief investment officer from a tier 1 bank in Canada, BMO. So getting to hear his thoughts is kind of like, okay, he comes in with a lot of credibility, engaging guy. And who knows, maybe one day we can even run SmallCapSteve live.
But yes, he is. Oh my! I've never stuttered like that in my life.
I gotta say, I'm having such a hard time looking at you without any stubble on your face.
I shaved this morning just for you, buddy.
I feel like it's taken 10 years off your age. Like you look.
Oh, that's all right.
You look like you're my son.
You're like all this. You gotta lay off the beer while watching football, buddy.
We're going to change the name of SmallCapSteve Live to SmallCap and Son.
Anyways, Brian Belsky, 1:30 Eastern on the Daily Dive today. After that, this afternoon, we've got a note coming out from young Justin on Village Farms, a little note from Raymond James. And this morning, we had some great macro content that Hermina assembled late last night. Was not expecting her to do it. I quite happy that she did. There's some great content on the macro side of things in terms of recent data released by StatsCan. But that's all. Apologies. I have to run like a madman here to pick up my son from school. But as always, entertainment purposes only. We are here with opinions and nothing more. Neither myself nor Steve hold any financial licenses or designations.
Okay. Well, thanks for joining us there, Jay. I'll take it from here. To everybody who joined us today, I say thank you. A tip of the Montreal Expo cap. I don't speak any French, but if I did, I'd be giving the Expo salute right now. I always love having a Cannabis CEO on. It's really fun getting to, again, I say it ad nauseum, but it's a really fascinating space because and Steve White kind of let the cat out of the bag there. And I shouldn't say that. A lot of us already know what it is, which is there's a ton of institutional dollars in the U.S. just waiting to flood into this industry once they get the regulatory, go ahead. This is an industry where there's going to be real cash flow, real EBITDA. It's lining up to look very different than what we saw in Canada. I personally think we're going to see a second bubble in the U.S. So, Steve White's going to become a very common name on channels like CNBC in a couple of years. Same with Kim Rivers and all these other names that we're interviewing. I think that it's just fantastic to have these people on and start learning and familiarizing yourself with the space. Again, nothing that we're talking about here is necessarily a buy or sell recommendation. If you're looking at cannabis names, if there's one thing we learned about in Canada, it's you've got to pick quality names, understanding what you own, understanding the balance sheets of what you own, who generates cash flow, who's got huge debt payments. We saw Ianthus blew up because they set up a cap structure that they couldn't work around. So these are all things that investors want to think about and ideas that I want us to continue to explore as we continue to cover the space. And I hope you guys explore it with us. You could have spent your last hour staring at any screen anywhere in the world, but you chose to spend it with us.